Welcome to Learn the Secret to Profit the brokerage firms don't want you to know. In this free 3-part mini course, I'm going to pull back the veil that Wall Street really doesn't want you to see behind so that you can create more profit with less risk. I'm your host, Ron Harrison, founder of Global Trading Institute, and thanks for joining me as I reveal the secret.
There's a secret the brokerage firms don't want you to know. It's how they trade their own money to make billions of dollars, but at the same time, they don't trade your money this way to generate profits for you. So first, let's explore how the brokerage firms want you to play the game. You've been taught to trade as a retail investor. You put your money in the market. If the market goes up, you win. If the market goes down, you lose. But markets constantly go up and down, and no matter what, you cannot predict every market directional change. So you end up having a 1 in 3 chance of winning with each trade placed. And those are not great odds. And if you're playing the odds, then that makes you you guessed it, a gambler. The brokerage firm is the house, and you are the gambler. Do you really think you can build consistent low-risk wealth being a gambler? Think about it for a second. Remember, the house always wins. So let's follow the money. You buy stocks, bonds, or any kind of financial product as a retail consumer. You pay a commission to your broker, whether they make profits for you or not. Eventually, the market moves against your investment and you take a loss. The brokerage house loses nothing. The money doesn't disappear, it stays in the market until it's extracted by a winning trade. Brokerage houses trade their own money using a secret method to extract massive profits out of the market with very little risk. Now, of course, brokers are not bad people. They're just not even aware of the methods that the traders are using to trade the firm's own money. So a little synopsis, brokerage house takes a fee from you to put your money in the market in a retail trade. They facilitate very low returns for you, and eventually you experience a loss. All the while the brokerage firm extracts huge profits from the market from all the losses that the retail investors have sacrificed. So my story. I'm Ron Harrison, founder and CEO of Global Trading Institute, and for years I worked on Wall Street for several of the large brokerage houses. I learned that there were two very different sides to this business. First being a broker, which is where I started, selling retail trades to the public, which was directional trading, gambling, with little to no long-term profit. The other side, institutional trader, where I ended up, was trading the firm's money, using the secret strategy, the house always wins, and that makes massive profits. So you have 3 ways to leverage your cash. First, you can keep all your money in the bank and earn a measly interest per year. Or you can continue investing like a retail investor, high risk, low reward over the long term. Eventually losses consume wins though. Or you can become the house. Remember, the house always wins. So let me teach you the method the brokerage firms don't want you to know. This is the secret. Non-directional trading. Profit no matter if the market goes up, goes down, or stays flat. So how do you do it? With options. I know that sounds scary. Bust a myth. Options trading is high risk. I'm sure you've all heard that. And that's true, that 95% of all money spent on buying options is lost. So where does our lost money go? It goes to the knowledgeable, the professional traders in the brokerage firms. With the GTI system, it can go to you. You will never buy anything. We will teach you how to sell options non-directionally. You can be on the winning side of the market, collect your small piece of the trillions of dollars that are moving through the markets each and every day. You can trade like the big firms. So why sell options? Short-term trades, high liquidity, you collect your profit up front, you generate a weekly profit, you implement very low risk strategies, and you use non-directional strategies to do all this. So what is an option? So a simple explanation would be it's a derivative that represents a contract, giving the buyer the right to buy in the case of a call, or sell in the case of a put, an underlying security. We use SPX, by the way, at an agreed upon price. So if that sounded like mumbo jumbo, I promise you we will clear it up later. Non-directional option strategy. The key to option selling is to place your position, the options you sell, where the market is not likely to go, which is outside of where the market has recently moved. Ideally, the current market price does not move through the strike price of your option position. Your options end up expiring worthless, and as an option seller, you do not have to fulfill any obligations. It does not matter which direction the market moves as long as it stays inside of the range. So we use technical analysis to determine past market movement, place our trades outside of that historical trading range, and we use a simple 12-point system of technical analysis, and no fundamental analysis or complex charting is required. So, of course, we don't have time on the mini course to teach you the technical analysis. I teach it in my seminars, my student support webinars, and mastermind groups. But it is important to know that technical analysis is how we determine where to place our positions. So we like to use this little pictorial series here to demonstrate kind of what we're doing with the market. So think of each box as the range, historical range of the market, where it's traded recently. So we look at the top side as the upper limit or resistance. We look at the bottom side as the lower limit or support. And then the snake, it just happens to be the market moving around inside its trading range. In this case, this would be SPX. So here we have a range, and the market is approaching the top end of the range, but still inside of it. Here we have a market moving sideways. We're pretty much right in the middle of the market. And here we have one where it comes down, getting close to the bottom of the range, but still stays in the range. The core strategy that we use is called the iron condor. So a sneak peek at part 2 is we're going to construct a non-directional option selling position. And we will implement a protection strategy to prevent potential loss. So again, as I said, our core strategy is an iron condor. So now we're getting a little more realistic. We have a chart here. If you consider this box, the range the market has been in, bottom being support, top being resistance. Current market price is pretty much right in the middle of the range, and we're going to say it's the current market price of SPX is 21.15. So we would sell our call positions at 21.65, 50 points above, and we would sell our put position 50 points below, giving us a 100-point range for the market to do its moving within. You then see we also buy protection at 21.70 on the top side and 20.60 on the bottom side, 5 points below and 5 points above. And this basically is the trade that we use. I hope you enjoyed part 1 of the Secrets to Profit mini course. There's so much more to share, so please be sure to sign up to receive part 2 and 3, and you can do so on the registration webpage noted at the bottom of this screen. I look forward to supporting you as you take the power of Wall Street into your own hands and build your own financial freedom. So I'm happy to be on this journey with you, and see you again soon.